Ladies and gentlemen, welcome to the Big Tech Frenzy. I thought I was getting a call there for a second. I thought it was Steve. I was like, "Oh my gosh, this guy's timing." Um, let's sorry, turning it up a bit. Can you guys hear me now? Sorry, this mic, man. Anyway, let's get into some finance news because, as you guys have seen, the markets are bleeding. Absolutely bleeding. So I wanted to bring up this first of all, that no matter where you look, I know I'm getting some comments on a recent SoFi video that SoFi is bleeding. I understand this, okay? Fully aware that SoFi is down 6%. Microsoft down 1.4%. NVIDIA down 3.5%. Tesla down. Amazon, Apple, Meta, Google. It doesn't matter, okay? Essentially, if you are looking at tech names and growth names, that you're going to see some overall bleeding today. Now, whenever we actually look at what happened today, there really wasn't too much. The only real piece of news that I think you can point to, and it really wasn't that much, was just a rumor about Meta slowing down potential investments in AI by downsizing, its AI division with executives expected to leave. That was the full rumor that we ended up seeing. But that being said, like, is that enough to bring the entire market down during the day? I don't think so. What I've always been really good at, and I want to try to talk about this today, is where do we think SoFi's growth is going to be like over the next 5 years? What does the growth of Meta or Google or NVIDIA look like over these couple of years? And if you think that they are going to continue to accelerate based on technological advancements, more customers, more use cases for the tools that they end up making, what are we talking about? Okay. Now, it doesn't mean that we can't take advantage of dip purchases. I have some small, it's very small. It's single digit percentages of my overall portfolio and below 5%. But of income funds, like for option strategies like JEPQ, JEPE, stuff like this, that during a time where the market starts to panic a little bit, even if we're going to get an single digit sell off or something along these lines in the broader market, I sell off that, accumulate more cash over time, as Tevis says, net new funds, these sort of things, and I go out looking for new possible deals in the market. We continue on. But this whole idea that people think because there's a single red day that SoFi somehow is headed back down to, $10 a share, $8 a share, something like this, is absolutely crazy in my opinion. If you call yourself a fundamental investor, if you call yourself a qualitative investor, what has changed? Okay. That is how you should be looking at days like today. And it could be a lot longer. Okay. And I understand what goes through people's minds, that, we've been sold off on SoFi for so long. I don't want to go back into a period where I have to wait a bunch of time. Maybe I should take some off the table. And if you don't have the stomach for it, 100%, maybe that's what you should do. Maybe you're over concentrated in a single equity. Okay. But it's very hard to predict whenever market corrections, crashes, whatever you want to call it, is going to happen. And a single red day might just be a blip on the road, and then we continue up into the green after what we hope is a rate cut, what we hope is new AI breakthroughs that end up lowering the cost of these amazing tools, increase their actual like productive use cases, right? That they can actually do more. They're smarter. They connect with more apps. They can actually get more work done. And I know that sounds like a small piece of the entire market, but it's actually not. That's going to play into everything. It's going to play into how the cost of Walmart, how they end up increasing their margins, and how Home Depot ends up benefiting their own business by understanding their inventory and reordering supplies and making sure that their employees are coming on like at the right time, like for scheduling, for everything that will be done through artificial intelligence. So this is what's really important, okay, is that you want to focus, if you are a fundamental investor, on what's been happening over time. Amit actually put out a piece recently on August 8th. He was following up on a Fundstrat report that ended up showing off this. The S&P 500, whenever you look across, 83% of the businesses in the S&P 500 ended up beating on earnings versus Wall Street expectations with a 7% average beat. This is an unbelievable percentage. Okay? 7% for 83% of businesses. Now, of course, the market's going to get excited and extend multiples and reach higher highs, is because earnings continue to climb. Stocks go up. That's the hope. But until we start to see some things that are, really, really poor signs in the market, like a Liberation Day or something like this, those were real bear cases. But for the most part, it just looks like institutional investors are rotating their money into things that might be safer. Okay. I'm 100% a growth investor, technology investor. I'll take my lumps whenever it's time to do that. Okay. But we try to, like this guy says here, avoid the emotions. And it is true. Honestly, I'm seeing things of people coming out and say, hey, you know what? Oh, SoFi is overvalued. It looked a lot better at $12 per share. And all the, comments start to come out after one red day. One red day, which, by the way, for the most part was extremely green based on them updating that they are going forward with blockchain payments, and they've updated which company they're working with, the size of that company and their network, and where they're going from here. So the market almost hit $25 per share on SoFi. But then we ended up seeing a broader market reaction just to general sell-offs. Like I said, we can bring this back up, but this was not isolated to your specific stock or your specific portfolio. This was everyone's portfolio. This was the AppLovins taking a 6% dip, Shopify 2.7%, Nubank, Robinhood, Chime, SoFi, anything growth, right? You can find names, the Salesforce, Intels, the Palo Altos, the Home Depots, and there might end up being a potential investment in those names as well. I honestly think that there could be potential opportunities in a name like Intel or Salesforce, for example, because they still do have growing, thriving businesses. Intel's a little bit different. I mainly am reading and getting interested about that just because of the institutional and government interest in a stake in Intel overall. So there can be times to play tech and still be cyclical as well, but I'm not looking to get into other sectors or something like this where I might have to relearn an entire industry. Heck no. No way. I'm going to take my lumps, and in the grander vision is that you're betting on an industry that overall does better. Okay? Averaged out. We don't know when we're going to see our hot days. We don't know when we're going to see red days, but overall, what's going to happen is that we raise up higher and higher over time, right? It would be like selling off Robinhood whenever they ran up to $60. We can actually bring this up as a beautiful example. Okay. This is why we don't panic, because Robinhood, for example, is a levered bet on the market. People bring this stock up whenever markets are doing well, and whenever they're doing poor, it falls like crazy, 6.5% down on one of the fastest growing, most successful fintech names of all time. But if we are to look back on the year, actually, we can even go year to date. There was a period here where we had an unending run, essentially from $8 up to roughly $60+ per share, $65. Okay. Earnings were great. Things were doing well. And then Liberation Day ended up happening. Trump started talking about tariffs. He ended up talking, the actual Liberation Day came out where he talked about his plan, and the stock went from 65 down to 35. Now, that would have been a great time to sell is up here. And there could be some people thinking that, hey, we're right here. We're about to have a massive correction. But there's been many dips before this where you end up seeing dips across the board, which ended up not materializing into anything. But during this bottom out, what you end up, not trying to sell out of is, but by panicking down here, is the upper case bringing this stock above $100 per share. Being a long-term investor, so then you can see this type of result. The up and to the right, okay? So all I'm trying to say is it's not a time to panic. It's a time to realize that you most likely, like many investors, have bought in and hopefully held on to some of the greatest names that we cover on this channel, that a lot of people talk about online. It's really been a retail favored market. But that doesn't necessarily mean that it has to stop. What I really do think stops it is changes in policy, okay? Slowdown in actual earnings, which usually happens from users or like consumers that are actually having hard times and that they don't have money to buy for the products that customers are looking for. But tech, for the most part, has honestly been insulated since early 2000s, because most times they're so agile to change their products that they can meet customers where they are, and their leverage is so unbelievably high because it's very, very cheap to run an online server rather than set up a store in a mall or set up a warehouse. Like the actual capital light business allows them to be so flexible with their pricing that they can meet customers where they are. Okay, artificial intelligence is that on steroids. It's the most capital light business to run something that can actually take in a customer demand, apply a more personalized experience, and charge them for that experience based on token generation that's getting cheaper over time. Energy costs, hopefully, if all goes well. I'm a big believer in this, like 100%, but I still have to give my disclosures that energy costs usually overall should be coming down. Okay, that there's many more ways to try to power these data centers today than there was 20 years ago, and that if that continues to happen in that trajectory, you can try to bet on where you think the stock will be on a day-by-day basis. But if you actually look out and say, hey, where is this going to be 5 years from now? Where's this going to be 10 years from now? There's not a doubt in my mind that I think that OpenAI or some of these larger companies will be trillion-dollar plus businesses. And if the valuation gets hurt today, that's perfectly fine. We need to look out further. If you don't need the money, if you're closer to retirement, you are withdrawing from your accounts, this is a completely different subject, because then you need to worry about the fluctuations of the stocks as you withdraw them. If you have redemptions that are needed in those, portfolios, that's completely different. Talk to a financial advisor. Okay. But as a growth investor, as someone with a long time horizon, someone who doesn't need the money, this is the way that I see it. That these are days that honestly should be celebrated to some extent. It cools down the market. It's perfectly healthy, and we let the earnings actually dictate where the stock should go next, because those are the companies that I'm focused on. If you go through my portfolio, you're not going to find many names that are just betting on sentiment changes. You're going to bet on companies that are fundamentally changing, that are taking more market share, where the total addressable markets are growing, and that we monitor those total addressable markets to say, hey, you know what, in a bad environment, what's the case that a user still needs Facebook? What's the use case that a user still needs Google? Or like financial services, a checkings account. Yes, personal loans can be hurt in recessions, but that's what the loan platform business and the other aspects of the business, like the tech platform and financial services, are there to, lower the amount of risky revenue, let's say. Let's see. These are the best. It really, honestly, I don't feel like I offer a lot of a lot of benefits to you guys whenever markets are perfectly green. You can pick any name. Usually things do well. Obviously, there's been some names like Nvidia, Palantir, Robinhood, stuff like this that have outperformed other equities. But overall, everyone's usually happy. Okay. On red days, this is where people panic. They sell their winners. They make mistakes. They try to buy falling knives. You know, they start to not pay attention to the moves that they're making in the market. And they do all this research, weeks and weeks and weeks, months even, to do due diligence in a company and then sell it because they think that it's gone down in a, few day time span. By the way, it's been a single red day. It's been heavily red. I mean, it takes a lot for a company like Nvidia to be down 3.5%. I understand. But this is the days that I stay strong. And honestly, I don't think that I've done anything better in my investing career than the way that I act on days like today. Buying companies as they are still going green and buying on the way up has been something that I've learned a lot, and that's been an amazing success. And I credit that to a lot of the people in the community that helped me do that. But not selling on red days has been by far the biggest game changer in my portfolio. By far. Anytime I've ever made like significant opportunity costs over the last 10 years has been me selling winners that have ran overall because I was potentially too early, or I was worried about a simple competitor or the market shifting or something like this based on a single report or something like just being too emotional with the things that are truly trying to grab my attention. I was here at $7 and minus 6% was a daily occurrence. I sleep soundly. Yeah, it definitely was a different market. The hope is that we don't go back into a time frame whenever we do see 6% on a daily occurrence. But, real market corrections do happen. They just usually are summoned by some sort of macro earnings, like generally, usually a recession, something like this, or a policy change, a war, something that's going to scare people, not institutions, shifting their portfolios to try to be more defensive. It doesn't matter how, honestly, you've played the markets over the last 10 years. If you have been growth focused, you're probably way outdoing the people that tried to play any level of, seasonality or like I don't know. It's like one of these things, like planting a flower and watching it grow. If you touch it too much, you just need to leave it be. You don't need to make a trade every day. But it doesn't mean that you can't buy dips. But I'm just not one to short. I'll be bullish forever. Yeah. Let's see here. Why are you, Roy, and Tevis competing for viewers? I'm not competing for viewers. I just go live every day at 7. It's just when I can go live. The only times where I'm going live now at 8:30 is whenever we have earnings or something that pushes my time. Yesterday I was at that same thing because I was at a dinner. So I had to push my earnings, but it would have been at 7 as well. I know everyone would complain when we get pullbacks. Take advantage, man. Come on. Yeah, I do understand, especially for people that have insanely large portfolios and they do need that money. I understand. Or I shouldn't say insanely large portfolios. What I meant to say was insanely concentrated portfolios. For people who have very concentrated portfolios, I understand looking at your one name and going, oh my gosh, what has happened? But the only things that have happened for SoFi have been bullish, you know? So, like I said, which I don't even think I ended up showing this page, SoFi ended up partnering with Lightspark to power blockchain-enabled international money transfers. Anthony Noto was not wrong. They are doing Bitcoin transactions through the Lightning Network. So, very interesting. It's only really going to be in Bitcoin for very small periods of time. So, Bitcoin's price should not have any sort of effect on this. And you're going to have a universal money address, which is essentially a email that's linked to a form of a wallet that you'll be able to have sent to you via any part in the world, or at least many different places that Lightspark is also working with. But they have huge partnerships with Revolut and all of these things. So it will definitely be very bullish. And that's right around the corner. That's not just like something that's bullish. It's like truly going to be a step change for their type of user growth. It's not like this is revenue generating. This is user stickiness. This is taking away from the Wises, the Remitleys, the PayPals, and bringing it more over to SoFi. You can keep more of your money on SoFi than you can on those other places, especially if they can lower the costs. If you look at any of those other ones, the expense on transacting money worldwide is expensive, right? But SoFi is mixing the brand and trust of a real U.S. bank and mixing that in with, you know, the cryptocurrency technological advancements that, like for example, Coinbase is a really good place to do payments, but you have all this sort of, you know, worry of like, okay, well, now I have to move it from my wallet into this area. I've got to transact it into fiat. They take a fee over here. It's just a little bit more complex. And then you still have to rotate it out into your bank. Unless you're direct depositing into Coinbase, you're using Coinbase One or the Coinbase One card, which actually just started shipping out today. I think they just announced that 20 minutes ago. So that's a brand new piece of news as well. And that's what I would be focused on. You know, it's done us extremely well to focus on these things on the way up. If we start to see on the way down, I'm going to change my strategy this much. 0. Kaput. I'm going to focus on what the companies are doing, product developments, user engagement, average revenue per user, operating leverage, all the things that, you know, technology companies and technology investors should be focused on. Let's talk about this red day. Let's not ignore the elephant in the room. What have I been talking about for 23 minutes, guy? I'm saying it's super red. Who cares? Do you need the money? If you do, sell your position. I don't care. What I'm saying is the companies that I'm buying are not fundamental. I'm talking about the red day right now. So I'm saying, if you think there's any changes in AI, technology, user strength, if there's a change in the, if you think that there's going to be a rate cut that happens soon, or if that's maybe getting delayed, fine. But if you don't, it's the same market that you were investing in yesterday. Plus, this cannot be highlighted enough. It's one red day. One. They happen. Okay? Corrections happen too. They're super healthy. Can we just talk about the red day, please? Yeah, no, my bad. Yeah, you're right. Let me go ahead and start talking about this red day now. But I really am appreciating a lot of the comments and everything that I'm seeing. Like I was talking about this report, which I was going, or the video I was making about SoFi and Chime, which I was going to release anyway. But because it was a red day, people are like, wow, I'm surprised that you didn't make any comments about this. I'm like, I do. I go live every day to talk about what's happening in the markets. Every day. That being said, SoFi versus Chime, like these are the things that I still focus on. I'm not a day trader. I'm not looking to get in and out of positions extremely quickly. I thought that there were some great reports today about from Amit on covered calls, which I think is a great strategy during times that could be long and really red over time that you want to potentially still make a little bit of money on in the markets over time. Sure, if you have cash, do it on the way down. Just make sure that it's further out of the money to make sure that those positions. Well, I mean, if you want the shares in the companies that you're writing those cash secure puts on, then yeah, fine. But yeah, covered calls are printing today. Tanner, hood is red, nothing else matters. Well, I mean, to some extent, they are such a great proxy because it just shows you that the sentiment in the market means like, okay, not only is the market red today, but you're selling off the company that you think benefits from having extremely bullish times in the market overall. Palantir is getting cooked after hours. Oh, I saw it during the day. I didn't see it in after hours. What are we at now? I mean, not terrible. 153.94 down another 2.4%. If you look over the last 5 days, though, it has been harsh. It has definitely been harsh. If you're a believer in this business, if you believe in Alex Karp and you think they are going to be the next Microsoft, this could be an amazing dip to buy. Okay. But that's what you should take out of that. I don't even think that the Palantir people who are lifelong bulls, and you meet a lot of them, it's a very cult-like stock, that they should even be like, they should not be worried about this sell-off because you're in it for the long term. And the companies, especially in a recession, this is the funniest thing, is that they actually need that expensive tech more. Like there's a great interview with Jensen Huang talking about recessions. And he said, AI will be a bigger investment during recessions because that's the thing that's working. Okay. So you're going to double down on the things that are working and cut the things that aren't during a time of, needed fiscal responsibility. And I think that that's so strong. Like, these are the software is such an important part of the world, or is such an important part of the market because it's lowering your overall costs. You can pay for expensive software, but what it should be replacing is the time to do tasks and the amount of tasks that an employee can do over a certain period of time. And that's the expensive part of the operation, is the human capital, right? So if you can end up making them 3 times more efficient, doing more tasks more efficiently, more accurately, you can end up charging a lot for it. But you're not paying a lot to increase your expenses. You're actually paying that out because you think that it's going to yield more growth or lower your expenses overall. So, yeah. I can't tell the color difference between Tanner's face and the lamp. Yeah. Well, I do think that, like, I'm good during these times. I promise you guys, and I'm not putting on a face here, I have felt zero difference in my like how I feel based on this market reaction. It happens. Okay. Is SoFi buy now down 6%? It depends on if you like it at these prices. Is it elevated versus 3 months ago? Oh, yeah. Yeah, we're still much, much higher than we were previously, which gets people worried. But SoFi's growth rates are also reaccelerating. Their product development's reaccelerating. Their communication with the market is definitely accelerating. It looks like things are back on track. Okay. So, yeah. Citron Research has said that they're doubling their Palantir short. Oh, that's cool. Is that today? I don't agree with shorting Palantir. I mean, I might not like the valuation, but I'm still not going to short a name like that. However, I do like OpenAI as a way of saying, like, okay, let's look at what a $500 billion company should look like. Oh my gosh, that's crazy. 2 hours ago, everyone's saying old news 2 hours ago. You guys are caught up, eh? Tanner, I got SoFi Cash Coach today. I've heard this from a bunch of people. A bunch of people have been sending me screenshots today. So I think they're doing a wider beta rollout. It definitely got to a new cohort of users. That's for sure. I've seen this from a couple people. What did they say about NVIDIA in 2016? Remember? I actually don't remember. I was an investor in 2018. I don't remember too much about 2016. I think that would still be almost a Bitcoin or Bitcoin starting to accelerate there. I know that that was sort of 18 months or so before I got in, that Bitcoin mining was a big acceleration, and they were using NVIDIA chips at the time. I had Cash Coach last year in beta. It was really nice. Did they take it away from you? It was like a temporary Cash Coach? Cash Coach is more impressive than I imagined. I just tried the beta. Okay. All right. I like that. Yeah, I think overall it's cool. I also put out a report, or sorry, the one person that sent me Cash Coach, it shows you your monthly bills. And I saw in his monthly bills that there was a $10 per month on SoFi Plus. And I thought, wow, you know what? I actually don't see this very often. So I put out a poll to see what percentage of the SoFi Plus users are paying the $10 per month rather than the direct deposit. I thought it was going to be like 95 to 5. But they actually said 16.5% out of the 372 votes that I ended up getting just over the last few hours here. But overall, if it is actually around that rate, about 15, 16%, something like that, that's much higher than I would have thought. So I'm interested to see over time if they start putting out reports on the growth of SoFi Plus. We really need an investor day because there's so many things that I think is important to the market, especially after seeing Chime's June presentation that they ended up putting out. Not for Q2, but a separate presentation right before Q2. They did like an investor day for new investors. It's unbelievable how detailed it is and how much I want to see those details on SoFi. Customer spend over time per cohort that seasons over time. Payback of loans. Do those customers stay around after their first product? Do they get multiple products? What's the chances that someone gets a loan then takes out a second loan with SoFi? They have all of this data internally. I just want to know it. I want to know how SoFi Plus is doing, what that does to the average revenue per user, how the growth of SoFi Plus has gone, whether it's direct deposit versus $10 a month. Like, there's so much we could learn. So much. But maybe that's just me. Maybe, just maybe. All tech is taking a hit. I'm not just generally talking about SoFi here. But I'm not just generally bullish on just SoFi. I'm bullish on big tech. I'm super excited to hold Google in my portfolio, Amazon in my portfolio, NVIDIA. I've made constant videos on these positions. And probably if I were to just leak to you guys, the next video I'm going to talk about is like, those are probably my 3 biggest names that I want to hold till 2030. Google, Amazon, NVIDIA, like bang, bang, bang. I'm bullish on America. I'm super bullish on America. I can't be investing for this long and not be, you know? And then all of these things that are coming out, like with tokenization and everything, this only goes to allow other people like me, who is not an American, and get more exposure to American assets. And I think that that also puts a higher multiple on stocks to begin with. If you remember, there's many times where this has happened, where a foreign investor will come into a country. This has happened in Canada. This has happened in many parts of America as well. And foreign investors will increase the price of real estate in that certain place. It's happened in Canada a ton. In fact, the government actually had to change the rules for how foreign investors come in to buy property in Toronto and these sort of things, because they were just ramping up the prices of Toronto real estate. However, whenever you're talking about that in equities, no one cares. Okay? Bid our stocks up, because no one needs to live in a stock. People need to live in homes. You want to make sure that people have affordable housing. I don't really think there's anything at affordable equity. Okay? Buy companies, buy American companies that are going up over time. And the more exposure that we can give to those people via tokenization, institutional investments, these sort of things, it just ramps up the overall bullishness. And there's many legs to the bull story over time in this point in history. My dog's behind me. But that gets me excited. These are not times that I get worried about the markets and look to sell off and try to day trade around. What's up, girl? I think you can maybe see her there. I don't know. Raina. Yeah. What's up? What's up, baby? Tanner, how many animals do you have? 2. A cat and a dog. I live a real like just traditional suburban life. I got a cat and a dog, and I water my lawn, and the whole thing that I never thought I was going to be, I've just become over time. Just worried about the economy, reading the news. But I love it. I honestly do. If SoFi drops to $10, I'm going to sell my grandma. That's something else. You want let out? Here, one sec. Okay, go on. All right. How did I get into investing? It was always just a thing in my family. I've got older brothers. My dad was really into it. They don't have jobs in banking or finance, but they just were generally interested in that. And then being the youngest of many family members, you just do what do what I did to fit in. Now they can't stand how much I talk about finance. I got way too into it. And does Tanner not have pants on? I do have pants on. I do. I got pants on. What does your family invest in? Everything. I mean, I got things with a lot of insurance and stuff that I always talk to them about, or Tesla, Nvidia, a lot of them, SoFi at some points, but some of my family members have sold SoFi, and I laugh at them at family events. It's a good time. Yeah. Tanner the dog banisher. Yeah. That's funny. But overall, guys, like if we could just go back, and then we'll get through some of the other pieces of news today, because there were a few. Like I said, the Meta downsizing their AI division did spark a little bit of like, oh, maybe that's something. But overall, I mean, like, there's just not been a whole lot of companies that have gone into the markets and said, hey, we're going to pay like record levels, acquisition level pricing for individual employees. And then the employees that didn't get that paycheck, I don't know how that ends up going on. So like there could be a lot at play there. Until I see it broad-based and other companies that didn't have that same strategy are also seeing some sort of downsizing to their AI divisions, then we might have something to worry about. Until then, I'm not worried at all. Nothing wrong in taking profits. I think that that's a fair thing to say. What I'll say is that it depends on your goal. If your goal is that you are looking at maximizing profit in a lifetime, then there could be things wrong with taking profit because you might not be able to enter back into those positions at similar pricing. And are you selling out of generational companies? Because what I think has happened is that we found companies in the market during this change in artificial intelligence, in digitizing finance, that there's not going to be constant new names like this. You know, you look at after the 2000 run, you get unbelievable pricing in the Googles and the Amazons and all of these different players. There aren't just constant new Googles and Amazons. The same players that are going to dominate the next, era of like technology, artificial intelligence, were the names that dominated the internet. So there can be things wrong with taking profits. Now, I don't know your individual needs in the world. You could need the money. Things happen in life. There's nothing wrong with taking a profit. I'm not going to scold you for doing that. But if you're talking about like, hey, you can take profit, but also still have the highest returns in the market, I don't know. That would be hard. Yeah, time in the market is better than timing the market. So just stay in the market if you can. It's always weird putting it into such simple terms, but it kind of is. And in the way that I like to look at it, which is technology based and growth based, that usually is the case, is that these companies get more efficient over time. The percentage of their work gets more automated, lower cost of energy, lower cost of the chips. Like, look at Moore's Law, and then you tell me about any form of investing that's better than betting on technology. Don Valentine, this guy might be one of my favorite investors of all time. He's one of the greats. He founded Sequoia Capital, by the way. And he used to say something along the lines of how he isn't really that technical or a sophisticated investor, and that he would just try to understand Moore's Law and try to understand its consequences. Okay. What does this mean? Okay. This means, more technology for the masses at lower costs, more utilization rates, just general more use, more revenue. And in all the companies that I invest in, that's really what I'm betting on. Even like the S bets of the world, it's completely my investment that I'm betting on the technology of Ethereum being such a massive breakthrough that the companies that have the most Ethereum or the most shares in the company that I think is doing well, which is a cryptocurrency. Okay. It's not actually a company the way that you would think it is, but it's such a spectacular piece of technology that makes money the more you use it. It has a dividend, it has buybacks, and it's going worldwide. And it's very, very powerful. And there's network effects. So even a part of my SBET thing has less to do about sentiment and more to do about the structure of the business. Buy more of this dividend paying company. If your equity is worth less than the assets that you're holding, you can sell your equity to then buy more of the asset, and that'll raise the general performance of the overall fund. It's not that crazy. all the great companies are overbought. It depends what you mean by overbought. All the great companies have expensive valuations. Yes. Does it mean that they're overpriced? Well, maybe the best companies have to be expensive because who's going to sell them during bad times? You know, at the end of the day, it's not like we all get chopped back to the same level of PE and price to sales and all of these different ratings, and then we start again. Even during sell-offs, the Shopifys, the Amazons, these unbelievable performers still have very expensive valuations because in the next cycle, they will be the next winners. And the long-term investors know that. Not Google. Yeah, no, because the market is questioning whether they are a great company. People are worried that their underlying business is under attack. So I wouldn't say that that's a known great business. Historically, it has been. There's zero questioning that it historically has been, but it is up for question if they can keep that dominance going. That I wouldn't say is buying, the best companies in the world. But there's not many people betting on the fact that Amazon is going to get disrupted. Maybe in cloud, maybe there could be a sentence about that, but not many companies or not many people are betting on Shopify being beat. There's exceptionally expensive names, the CrowdStrikes, the Robinhoods, the Palantirs, Teslas, because people don't think that they will get beat. The unbridled spend on AI, compute, and data centers has been alarming. Well, this is why I think that it's not that alarming, is because it's every last GPU and data center that they end up setting up is immediately being utilized to its fullest extent. Okay, so let's imagine you're running a lemonade stand. Okay, we're going to go right back to basics. There have been times in history where what has happened is a company will go, hey, we have a really good idea. We want to set up the groundwork for this future project that we know is going to be utilized a ton, or that we have high hopes for this. And that might be correlated more to the high investment in all these nuclear stuff and the SMRs and all of these things that are future projects that'll happen way down the road, because we don't know if they will be needed as much into the future. Now, there's a high chance that there will. I'm not making any sort of bet on that. I'm just saying that's sort of like the dark fiber that was being laid. Like, hey, we're going to do all this infrastructure because later on we're going to need these cables, but we don't have immediate utilization for them right now. Okay, so let's go out and in my lemonade stand example, hey, we did a survey. People love lemonade. We're going to set up 100 stands around the world and start them 3 years from now. That is heavy, unbridled spend. Okay. However, the difference is that these data centers NVIDIA is getting called by Meta, by Amazon, by every single hyperscaler, neo cloud, everyone. Okay. And they're saying, hey, we need your most expensive chip. We need this chip. We need this setup. We're setting up a new location here, blah, blah, blah. And the second that they even start to get set up, they're immediately ran and those tokens are being sold at mass. So imagine we're running a lemonade stand here and we're going, okay, we're going to buy 4 lemons. Immediately there's customers out the door. It doesn't stop for 8 hours. You're booked. And then so you go, okay, tomorrow I'm going to buy this many. And then it's just immediately sold out. Okay, well, I'm going to double that spend. Immediately sold out. I'm going to double that. Immediately sold out. Is that unbridled spend, or do we just not understand the demand for lemonade? That's what's happening right now, is that Amazon, Microsoft, Google, they are saying, hey guys, we can't stand up these data centers fast enough to supply our customers' demand for artificial intelligence. Sam Altman just said they need to double their compute over the next 5 months. Double. That's not in hopes of demand. That's just, hey, we're seeing it. We're capped out. We actually need to limit the amount that people are using this product. Hey, you can only send 5 queries, you can only send 10 queries, because everyone is maxing out their demand. So we need to stop you from using it too much. I know you're having fun. I know you're loving this. I know you're getting benefits from this, but everyone else paid $20 a month. Everyone else paid $200 a month. So we need to cap you here. The hope is with AI, and the reason why I'm not worried about the unbridled spend is because we have not found any cap or any slowdown. And by the way, it's not the chips really that are the bottleneck anymore. It's mainly energy, which is why you're seeing those heavy investments in nuclear, SMR, whatever. Like literally every form of energy right now is being pushed to deliver more because there's more use, there's more need. Let's see. Palantir down to 153. Yeah, we covered that. Have it up still, actually. Here. We're still falling into the after hours for the most part. For the most part. Some companies are returning. And honestly, it looks like the companies that are still selling off, the Palantirs, the Teslas, bullish, have been the more excitable names in the last little bit. Robinhood once again down another 1.9%, 105. But like, guys, honestly, think about this for a second. We're at $105 a share after some of the most insane red days and bad after hours as well. If you include the two together, we're down like almost 9% eventually here if it continues to fall. So I'm not worried about it. We've had a extremely hot market, and I think it actually allows people to stop worrying about, hey, is this the top? Is this the top? Is this the top? I don't actually think this is well, what does the top mean? Will I see an S&P 500 that's higher than this? No doubt. Do I think that I can pick stocks that will outperform the markets? Not everyone agrees with this statement, but yes, I do. And it's a really easy belief, is that I'm betting on technology companies and they do better than most sectors. Keep dropping, I'll keep buying. Yeah, if you're a net buyer, then you don't really mind this, right? Yeah. What price is Figma a buy? I haven't really taken too much of a look at Figma, but like we are much, much higher than what they IPO'd at, which is still pretty scary. And I thought that it was insane that the stock ran above $100 per share to begin with after IPO. I mean, the mania has just been insane. There have been some stocks where there has been truly manic, investment. But then you see, like, the number one position that I end up being a big holder of is NVIDIA. And there's not manic buying of NVIDIA. NVIDIA is the number one most under-owned mega cap tech name out of any of them. NVIDIA's institutional ownership ended Q2 at 2.41% below its S&P 500 weighting. It's insane how cheap, no one wants to buy NVIDIA here because it's a $4+ trillion business. But as the S&P 500 sees it, there's no denying their fundamental outperformance right now. That's what I'm going to worry about. Tanner, your thoughts on SBET versus BMNR? I I worry about what I've not done well on is buying number twos versus number ones. Meaning, I usually like to buy the NVIDIAs over the AMDs, the Teslas over the Lucids or Rivians, pick the name, which is usually number one and which is usually number two. It seems as if SBET is number two in this situation. That's not, I wouldn't even say a controversial statement at all. I own SBET and I do not own BMNR. The way that I would like to think about this is that these are businesses that and this comes from a place of ignorance, okay, me just not knowing the market well enough. I wouldn't think that these are a style of business that you need to be exceptionally good executor in. I could be wrong. I'm sure there is execution to this business, but I was mainly betting my investment in SBET versus BMNR on the market value of the like their MNAV, their market net asset value. So, I bet on SBET, but history would say that I've made a mistake and should just buy the best. Costco or Walmart? Literally none. And probably Walmart. But I wouldn't buy any. Those companies seem expensive to me. And that's what's crazy. Like that's the mind-blowing part, especially Costco. Costco seems expensive. But yeah, big tech is coming with big earnings. That's the crazy part. It is making up for such a large percentage of the overall market, which scares a lot of people. But they're just eating the whole market. Give me 1 second. Look, I get knocks on my door and coffee delivered. So good and tasty. All right. Let's see. It's almost that time of the year where everything sells off. We're still in August. It didn't happen in the first 2 weeks of August, and people were saying, hey, you know what? Maybe we break trend here. And it is an average. It's not every year that we see sell-offs during this time. It's just more times than not do we see sell-offs between August through the beginning of October. It wasn't the dog that brought the coffee. It was my girlfriend that brought the coffee, but the dog also ran in the room whenever she got the chance. Well, you say quote unquote coffee. It's got a thing on it. It says, I don't know if this code ends up saying the restaurant number, so I'm just going to block that just so I don't get doxxed. But iced coffee. Oh. Yeah, wife delivery. Tanner, since you're up year to date, I think you should give us all a big tech frenzy stimulus check. I'm sure you're up big as well. Look at your profile picture. Was that a nice Lamborghini? Yeah. Guy's got a Lamborghini as a profile picture asking for stimmy checks. Mirroring. In other news, like I said earlier, Coinbase One cards have started to ship. Now, if you were to bet on Hood back in the day, whenever things were not going completely up and to the right, what you would have noticed is a change in their product development. Okay. And if I were to point out anything from Coinbase here, is that even during days where things potentially are red, they have one of the greatest development teams. Engineers are great there, and they continue to push out new product. As that type of investor, not just fundamentally, but qualitatively, which would lean more into them continuing to ship product, have an A+ engineering team, these sort of things. That's what I'm focused on. So I like to focus on two, the quality of the business, and the quality of the actual product and their ability to continue to deliver that product. And then fundamentally, am I getting a good deal on this? Is it going to continue to grow over time? A little bit mix of both the quality and just the general performance of the actual underlying company. The dividend is your time. Huh? What? Hood S&P inclusion will be so hype. I know. But guys, that's another thing. Like, we're talking about SoFi going down to $10. Anything can happen. Their company can fall through. But they are up for S&P 500 inclusion as well. In fact, Goldman Sachs, I think it was Goldman, Stockcode ended up putting this out. We saw this report from Mumu a while ago, but still, I thought that this was great. If you take a look, they said stocks that may join the S&P 500, and this was from, Goldman Sachs Investment Group. You can see SoFi right there. It was on their list of companies that could potentially get in. AppLovin, Robinhood, we talk about these names all the time. IBKR is one that I think should get in. It's interesting. The star probably is there because they're already in the S&P 400. So it's a little bit interesting there. But yeah, SoFi would be really interesting. Toast, I never even thought about. That would be crazy if Toast got in before SoFi and Robinhood and AppLovin. Wow. I didn't even consider that. But overall, that's pretty cool. I think App is the most likely to get them out of all of them as well. However, I've been thinking that for the last, 5 potential times that they had an opportunity to gain entry into the S&P 500, multiple different acquisitions, a rebalancing last time, and we didn't get in. So that part makes me think, okay, well, SoFi still has a chance. And not because they're more, that they're a larger company or more likely to get in than any of these other large businesses before them, but just because they have such a mix of high growth, good margins, and they are a bank. These things could be aspects of the business that, Standard & Poor's is looking for. It was a brutal day, but but at least I hold on, my friend. Piyush, good to see you. How much lower does Palantir go? Well, the problem with Palantir for me is that I wouldn't want the company at this price. So you're talking to the wrong person. There are bulls out there that would have different things to say about buying these dips. I wouldn't want to buy this dip regardless. And it's a blind spot for my investing. My investing journey was Palantir specifically, not the type of business it's in, not the things that they're doing, but just specifically with that company, because it had accelerated too fast, in my opinion, for me to even appreciate the earnings that they were putting out. I promise you, when you get a correction, everything goes, especially growth stocks. I completely agree, but you don't know that we're in a correction right now. That's the part that I'm questioning you on. Is Is this a bad day, or does the market go down 10+%? The names that we're buying might be down 10%. That doesn't mean that the general market's down 10%. And does that matter? You know, because things can quickly turn around if, let's say, we get a catalyst like someone brought up in the chat earlier. I apologize for forgetting your name, but that, you know, Nvidia could end up showing off earnings and say, guys, I know we're red this past little bit, but this is the most demand we've ever seen for our products, and it continues to accelerate. And we're, very, very excited about, well, 2026, but for them, like fiscal 2027, the whole market's going to go, okay, well, do we continue to sell off growth stocks in the face of growing earnings and a higher demand for the most important product and technological change in all of history? I don't know. This is a correction 100%. This guy has the crystal ball, guys. I don't. He does. He knows. Like every other time in history, I know it might feel like that right now, but if you just zoom out and take a look, let's say this was today, okay? What was that? What was this? What was this? What was this? What was it? Like, there's been constant times where we've had red days and people have felt like, oh, this is the time. 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 This was a correction. Every other point was a freak red day. And that's okay. Get out of individual stocks and dollar cost average into a pool of diversified funds and get to sleep easy. I think that that's a very powerful message. And I'm not even anti what you're saying at all. I'm a big believer in diversification. But I also think that there's probably studies that say that diversification happens after 14 names, after 18 names, not 500 names. Or what I actually think is kind of sickening is not just funds, but fund of funds, where you end up taking position in 2,500 different positions and you're just getting raked by fees of, multiple funds that are buying other funds, and each one is collecting their piece. So I agree with that. I completely do. But my strategy has worked and I've slept very well. So I do completely agree with the whole sleep well thing. I wouldn't buy something that I don't know, but mainly that's on not knowing what you own. Not doing your due diligence is what makes you panic about stocks. If you buy something based on someone else's conviction, you will panic and sell. Okay. Which is what I also worry about some viewers that come in and they don't want to do the due diligence. They want to watch someone tell them what to buy. And I don't want to be that person, but I'm also here to say, here's the things that I'm interested in. But it's for me. I sleep well with this. Doesn't mean that you're going to sleep well with this. Okay. There are great investors that prefer dividends. There's great investors that prefer high growth AI names. But I sleep well because I know the companies that I'm buying. And fundamentally, I don't think that they are affected at all by this red day. Maybe Robinhood a little bit because the sell-off actually does affect their business. But, we're going to see a active trader day and then 4 other events next year and 4 other events the year after where they push out new innovative products that push their total addressable market and attract new users, new growth, higher revenue per user, and lowering their cost of operating the business. That's extremely hard to sell off to go buy diversified funds and buy into industries that have worse margins than big tech. Even though those industries are completely needed, I don't need to be involved in them. Diversification is a protection against ignorance completely. However, it doesn't mean like people said, like, whenever I say, oh, you know what, I'm so bullish on Nvidia, and then they go, oh, well, why don't you want it to be more than 50%? Well, because it's still ignorance on my part. I think I know the company well. I've benefited greatly from the name. I've been involved in it for many years, but it's still ignorance on my part that I don't know the company inside and out. I do not have the knowledge of Nvidia the way that Jensen does or something like this. I don't know their competitors that way. You know, you can only do so much, but still be hindered by insider information or something like this. So I'd like to know the companies that I even hold, but ignorance is what makes me diversify even more. I just don't need to diversify into 2,000 names and get obliterated by someone else who's buying a buy button. Like those institutions, by the way, are buying individual companies. They're saying, hey, we've done the math. Trust me. I'll do the math. I'll trust me. I sleep well knowing that. You know? Um, let's see. It's almost like we're cursed on SoFi at $25. Anytime it gets pulled. Piyush, I love you, brother. I appreciate a lot of your sentiment in chat. But guy, we just got here. I felt cursed at 6 and 7. I'm like, curse me at 25. That's fine. I'm perfectly curse me all day long. You know? Like I've tripled. I'm very happy with the company, but there's no curse here. We've been here for all of 2 weeks. Not even. Not even. I mean, look at SoFi stock on a 3-month basis, and then you show me where the curse is. We hit our highest close yesterday. So, yeah. Yeah, that felt like a curse. It really did. It went on for too long. Tanner, at what price would you consider buying SoFi again? I'm actively buying it. I'm buying SoFi. Now, if we start falling into a range, or like I see that the markets are not as bullish to pull the multiple up even higher. I'm going to get out of my, I've got small single digit percentages of JEPQ and JEPI and stuff like this for income generation, but they fall less than my individual equities, which is what that guy was saying earlier about, um, betting on, like betting on things that you can sleep easy with. That allows me to collect a little bit of income, and then during these types of events, I can sell that off, have a little bit of cash, and then pour that into names that I like. Plus, they're also monthly dividends, which allows me to purchase into stocks as well. Portfolio in shambles after a single red day. The 100+% since May was a lie. I don't know what you're talking about on the back half of that, but your portfolio is in shambles in one day usually means that you're playing with probably investing strategies that I usually advocate to stay away from. Most of you guys probably should not, if you're investing like me, you're probably not down. I mean, at the most 6%, 6.5% if you're all in on Hood. Am I going to buy BMNR? I could be known to. I've been known to. I only went down 0.5% today. Huge plus. Down 2%, down 4.5%. Yeah. Um, if I'm investing like you, then I want it to drop way lower. Well, you want the stocks that you're buying to before you buy them to drop way lower. I don't think you want your overall portfolio to drop. If you're fully invested like me, I mean, I'm not looking for things to drop. Um, but I just don't have enough cash for it. I'm not heavy in cash or accumulating cash. I will be in single digit cash percentages if we continue to fall, and I will buy a small bit. I'm not looking to make unbelievable changes to my portfolio and stuff like this because I can't time it. But that's how I sleep well at night, knowing that like I can be an idiot and still make a fortune in the markets because it's just designed that way. Because I'm a believer in the technologies that I'm investing in. Um, down 17%, only had one position, 2x AMD ETF. I didn't even check AMD. What are they down today? 5.44%. How are you down? What's the name of their 2x? Like AMDL or something? Oh, I guessed it. Down 10.89% and then down another 2.3% in the 24-hour markets. Yeah. That makes sense. It's like folks honestly expect stocks to only go up. These last few years of bull runs have really spoiled a lot of people, it seems. It's definitely true. If you've been in here long enough, not in this chat, in the markets, that you do know, even when things are going really well, multiples just get extended, people get spooked, large pools of capital move around. It happens. Okay. People get worried about a forward-looking report that comes out. It's not always true. If you invested through the time, this is, I made a video on this so long ago. It's such an amazing piece. I was a child. Looking back on those videos, I look like a kid. But it talked about through the time of, 2009 through 2018, there were so many reports every single year that spooked the markets about, 2011, the crash isn't over. We have another one coming. 2012, huge red days spark outrage in the markets, large crashes coming. Every single time there's these fear-mongering reports that end up coming out that in the short term spook markets, even during a time where, if you guys know your history on markets, were unbelievable bull markets. The longest bull market in history between essentially, 2009 to 20, like we can say 2020, but 2018 was quite a sell-off at the end there. But yeah, 2020 essentially. And then into 2022, if you don't even count COVID. It depends. There's always these shifting ideas of what people call a bull market, and it depends on the level of crash. But I don't think there's many people that disagree that 2022 was a bear market. Make better decisions and the red days don't feel so bad. I don't know if it's that. I think people just want to make sure that the good ideas that they've been investing in for so long actually, like, the profits stay in their account. And they don't know if somehow the market has caught on to their greater fool theory that they've been playing, where they're buying things that might not be worth the value that they're holding them at. And I think a lot of Tesla or Palantir investors can get spooked by that, because whenever they do look at the valuations historically, they are expensive. But doesn't mean that those companies are bad. I mean, they there just needs to be a lot of execution to justify those valuations. And so far, I mean, we're seeing it from Palantir 100%, and we've seen it from Elon Musk and Tesla before. So people give them a lot of execution credit, considering the fact that their total addressable market's so big and it's just such a clear, opportunity to go after is robotics and robo-taxi and all of these things that are just clear opportunities. So I get it. Yeah, but it's a real thing, right? Like, we're down this amount, and that is crazy. But we also, if you're a Palantir investor, you have to realize like where you've came from. That's the fluctuation of how much your entire business used to be worth. Actually, more than that, because there's been dilution. Went to dinner, came back, we're still live. Yeah, it's only been an hour and 20 minutes. I'm just having some fun. I'm talking with people. People are coming in. There's new people coming in. I got to calm some nerves. It's a spooky day in the market, but and I'm here to calm nerves, but not necessarily tell you guys what's right. I don't know what's going to happen tomorrow. Literally the next message. Think we go green tomorrow? I've got no clue. I didn't think there was much to go off to justify this sell-off in the first place. However, like, I do feel like I know what I own. I do believe that AI is the biggest technological revolution in history, or innovation, not revolution. Biggest technological innovation in history, and that there will be unbelievable margins that are unlocked from what is going to happen. Will there be times similar to maybe the .com? Well, even .com, I have so many differences of why I think the .com is so much different than what we're seeing today. The companies that are getting extended valuations in this AI quote unquote bubble, most of them are not even public. If you look to Cisco, which was probably the most extended business of all time in artificial intelligence, you look at what the multiples that they were achieving at their heights at $500+ billion market caps, which justified them being the most expensive company in the world, by the way, was like $500+ billion. Now NVIDIA is like $4+ trillion. And the plus, by the way, that I gave it, 4+ is like the size of what Cisco was at before. But the multiples on NVIDIA are nowhere near what we saw on Cisco during the heights of the .com bubble. It's actually more closely aligned to Palantir, to be very honest. Yeah. From my experience, I think the next month will be days of bearish. I like the wording of that. Will be days of bearish. I think that you could be correct. But what does that mean? If you're a trader, that could mean you rotate out of your positions and you look to buy at lower lows. If you're wrong, and history did not rhyme as well as you thought it did, then you could have sold out and had to buy into companies that you had liked for higher prices. A lot of people did this in many different markets, especially with high flying names. Like markets can drag down, but if NVIDIA is still the darling of Wall Street, it can still continue to extend. SoFi partnership Mexico. What does that mean? Did something just come out? SoFi partnership Mexico. That's like there's a hidden code in there. I don't know. No one's tagged me in anything yet, which is the luckiest part. Is it from SoFi's own account? Paul says, yep. Okay, I'm going to take 2 seconds out of my day to look for SoFi partnership Mexico. And if we don't find anything, then that's okay. I'm so far not seeing anything. You got to give me more than that, Paul. I'll find the company. Are you talking about Lightspark? Randy says, yeah, we already talked about Lightspark. We talked about this today. But how is that Mexico? Yes, Lightspark. We already talked about that. Are they from Mexico? I didn't even know that. It's not really too big of the case. Essentially, we're going to be using the Bitcoin Lightning Network, which was sort of an add to like almost like a layer 2 of Bitcoin to transact and handle international payments. We covered it. It's very bullish, and that's why the stock ran up today. We almost passed $25 a share, but then the market got spooked and ended up selling off everything. But MSCI, August 26th, SoFi is going to be a part of a larger index than they've ever been a part of. Awesome. That helps the floor of SoFi, and more institutional investors will be part of SoFi. Maybe we get into the S&P 500 one day. That ends up increasing the share price and lowering the volatility. We can still have bad days. We can still find lower lows. SoFi's execution can be worse, but it's hard to short businesses that are heavily indexed. That's for sure. So, yeah. Fear of missing out is what drove Palantir to the stratosphere. Well, I mean, guys, I think the move over the last 5 days is too early to tell that a company is honestly selling off. We have to remember, like Nvidia was like $150, faced insane, real potential concerns. Okay, DeepSeek was going to change the way artificial, like the chip demand for artificial intelligence, and that things can be done with much less actual token generation than what was needed before, because China had solved that because they didn't have the chips that were needed, or that they couldn't get their hands on. So they found a new use case for this. Nope. Every single large tech companies came out and said, hey, we're not slowing down our CapEx spend, and actually we're going to double down. We saw this across the board, everything. The only report of any sort of customer slowdown that we saw today that was like could be a real fundamental change was Meta saying that they're going to change around their AI division a little bit, and some executives might be leaving. They said they were going to split it into 4 different segments. One with infrastructure, product, super intelligence, and another one I forget. But yeah. Selling off is like pulling a rubber band back. It definitely is if it's selling off of a fundamentally strong and growing business. You know, then we shoot back up. Nvidia at that time during DeepSeek, we pulled that down because of such concerns about the industry that we're in, Trump concerns, China sales, everything like this. Pulled it down below $100 per share and shot right past it. But those were good buying opportunities, and I shouted that out. SoFi's a rubber band. Well, I mean, guys, we haven't fallen. What I was saying is that Palantir, there's not even really bad reports that are coming out. There were some with like, you know, the government's trying to reduce reliance on Palantir and stuff like this that maybe could spook markets, but that came out before they hit their highs in, 180s plus. So yeah. Um, Hearing talk of big shorts on Palantir for the first time. Yeah, I mean, Andrew Left is a very popular short investor for Citron Research, but big shorts, I don't know about that. But yeah, he has the same commentary that everyone's had on Palantir, even back whenever it was $70 a share. People were having those same concerns. That valuation is being extended. Yeah. Now, I'm defending a company that I don't even know that well. But if they continue to put out the earnings that they've been putting out, like beats across the board, margins, net dollar retention, total revenue, net income, like just across the board beats, are we going to see Palantir's high? I don't know. There definitely can be growth from Palantir that justifies their price today. That justifies a $200 price. It's just an insane level of growth that's very hard to do. It's definitely possible. Every price can be justified. It's just the higher it goes up, the lower the margin and the harder it is to actually execute. He had been charged with securities fraud. That is true. But yeah, I don't think it's actually the for Palantir. It's for other things. And then not only did he short it and put out reports, but then hedge funds were following him in and paying a fee for putting out those reports. Stuff like this. That's what I heard about it. I'm not. Yeah. Palantir would have to have a $40 billion annual revenue to justify the current price. I don't think it needs to be that high. Growth can justify at high margins what price you're going to be at. But you need to hold up those growth rates for long periods of time. And there's very, very few companies that can hold up 40+% growth rates for 5+ years. Very, very few. We're here because Tevis sold $24 cash secured puts. If Tevis sold covered calls instead, we'd be green. That could be true. No question they're a unicorn. No question. I don't think anyone's questioning that. It's just, they're the unicorn of unicorn. The market is saying they're the unicorn of unicorns. I think the actual definition of a unicorn is like a $1 billion startup. 1 billion. We're a little bit past that. You're quite past the unicorn at 400 billion, or I think it's definitely sold off quite aggressively recently. Yeah, we're at 374 right now. But yeah. Hood is a steal. It is if the market stays green. If we end up going through like a large bear market, it surely isn't a steal, but I'm not saying it's overvalued, but there's a difference between steal and fairly valued. Why are tech stocks selling off? Honestly, there's really no real news there, which is the crazy part. Hi, are the bears lurking? If they are, enjoy. I mean, I put out a SoFi versus Chime video that I highly think that you guys should go see. Chime is a name that maybe not everyone is following, and I understand that, but they are a good comparison for SoFi, and they tell a lot about where SoFi can go and the different customers that they could grow into. Like everyone says, oh, they don't go after the same demographic. It's like, okay, if SoFi has the aspirations of having 50 million customers, they have to grow into Chime's audience. They have to. So, it is a great comparison in my opinion, and it just goes to show you how strong SoFi's execution has been. They have a smaller total like customer count and all of these things, yet growing so much faster than Chime's. Everyone's saying, yeah, you're comparing total users to active users. Guys, look at just the straight revenue. Look at average revenue per user. If total users is taking in every single customer, and maybe some customers aren't even there, I'm factoring that into average revenue per user. So there might be some dead users on SoFi's account, which they do actually churn off those accounts and remove them from the total user count. But there could be some people that barely use SoFi. That's still counted in average revenue per user. So, like, that goes to prove if we were looking at active accounts on both sides, it would only boost up, SoFi's average revenue per user. So people are making all these, connections, being like, oh, but it's different here, or it's different here. It's not one quarter of exceptional results. It's a continuous trend of faster and faster and faster growth rates. That's the interesting part. Everything is overvalued until it's not. I mean, that's super true. You pay for forward growth on companies. If you wait and people are not increasing the price on those stocks, they're no longer overvalued. We've seen companies trade into 500 plus PEs, 1,000 plus PEs, and then they expand earnings, and that comes down really fast. You see that on Nubank, for example, Nvidia, for example. I know Hims did a Super Bowl ad. I don't really care about Hims. The slushy ads for Ninja. Yeah, I am still a big fan of Shark Ninja. Holding it. Happy holder. Yeah, I mean, I'm looking at overnight markets, and it's still definitely going down, but that's okay. It wasn't the greenest day, but it happens. It's not the first time that they've had a large sell-off and then to only, to just find new highs later on. I've been DCAing into SoFi. It's been building and building. I'll take a look into Chime. I'm not a shareholder of Chime, but it is definitely worth a look into seeing the differences. But I honestly think it'll just prove to show you how strong SoFi is. I will be talking about Nvidia probably in my next video. Well, I don't know, because the market, if the market continues to sell off, I'll probably have to talk a lot of people off some bridges, just freaking out about market reactions. I mean, the job as in whatever I am, retail commentator of stocks, is just calming people's nerves and trying to help people focus really on what's happening in the market, what's happening fundamentally. Do you think this sell-off will continue? I don't think it will. It definitely can continue, but we haven't really seen much to justify. I understand multiples are high, and if that's what this is, just a correction back to reality, then it'll be a very small sell off. If there's something bubbling up where people think that this is a cause for, you know, long term lower multiples, then yeah, but I don't see that right now. I would say the sky is definitely not falling, but people are shouting at me in my DMs like it is. It'll be okay. Yeah, it could just be a seasonal thing. August and September are known to have it. Um yeah, I mean, this is why I bet on tech, is that there can be some potential hiccups in the markets, but tech usually seems to outperform every single industry, almost always, which is crazy. But it's good for whenever times are doing well, and it's especially good for whenever times are doing bad, because that's when you need to be very fiscally responsible and focus on margin and things like this. And that's also where a lot of these software names benefit. So I continue to be a big investor in ServiceNow, Salesforce, NVIDIA, Amazon, Google. Yeah. I like SaaS. I like software. I like hardware names that enable AI. I'm betting on no reverse stock split for SoFi this year. Yeah, I'm betting on no stock split ever reverse stock split for SoFi ever. I'm sure we will get a stock split from SoFi one day, but not today. Um, let's see. Yeah, but it's a matter. So if you guys are worried about the economy being weaker than what the data might show, then you have to look individually at your own. This is why I also um, benefit from being an individual stock picker or something like this. Is that, do I think that on a macro perspective, you can say, okay, well, these types of things affect a company like SoFi, who's a lender, which the stocks will be impacted from that. SoFi will take a hit if people worry about the macro, even in the face of guaranteed rate cuts because of a weakening economy. We also have to venture is like, okay, well, if everyone's losing their jobs and people are not getting new employment and um, you know, people are hurting, then they're not going to be able to pay back their loans, or they could be taking out new loans, but it's for malicious intent or something along these lines. That happens. It happens less for people that have prime plus, um, you know, prime plus FICO scores. Piyush says, buy that dip on SoFi for community fund, SoFi for life. Piyush, thank you so much. I appreciate that. We'll put that into the community fund. We should check it, by the way. I haven't updated it from the last stream, so I still need to put in the JP Morgan one as well, but I will do that. But let's go ahead and take a look really quick. Oh, I'm not logged into anything because this freaking new computer. Yeah, what a bloodbath. But as we've started to see more of this, we're getting a little bit more data. That should have been hidden. And so your guys's, um in like donations have led to quite a red day. If we look at total, that'll show us a lot better insights here. This is really what people should be seeing. We're up on SoFi. We're down on SBET 50%. Well, because we did just get a big bump at 37, a lot different for, like no dip buying, which is a lot different than how I would treat my own portfolio. So yeah, overall big red day. But if it wasn't for SBET, I think that we would have a much better result in here. But like I said, I'm starting to invest in SBET in my own portfolio. Yeah. What are the specs for the new PC? I'm not a super big PC guy. I did buy a good PC, but I had I don't remember everything. Like NVIDIA 5080, AMD like 980X3D or something like that. AMD 7X or 980 whatever. That Ryzen chip, but not a 5090. I had a 5080. And what's it called? 4 terabyte N.2 SSD. And what else? What else am I missing? Something else. Yeah. SoFi 2227. We can go check another. Oh, my dog wants to be let out. Let's take a look at this, the stocks real quick. SoFi, yep, 22.28 right now, selling off in the 24-hour markets. People love a red day. Yeah, 64. Yes, you're right. 64 gigs of DDR5. 1 second. Oh, wait, I meant to share my screen. The dog is AI, you're right. Yeah, my computer was giving me so many hard times, but now once I've updated all the drivers, like I can do everything. But hey, I mean, got to give some support back to NVIDIA, back to AMD. I think it's got Corsair products in it as well. So for people that are interested, I think. Yeah. It was the best of times. It was the worst of times. How much did I spend? I don't remember what it was in Canadian dollars. It was literally this one though, because whenever I was troubleshooting it with everyone, I bought it from the Canada Computers, which is like a local spot here. And where did I talk about it? I don't know what it is in US dollars. We can transition, or we can translate it, but also I hate the LEDs and everything like this, but it just was what it came in. So this is Canadian dollars, by the way. This is not US dollars. I don't know what that translates to. But it does not look like this anymore. If I were to just pan down, I have all the LEDs shut off. It just looks like a black box. But yeah, it was an AMD Ryzen 7, 5080, 64 gigs of DDR5, 4 terabytes of N.2, and then whatever the heck all this means. But yeah, a beast for what I needed, while also staying away from Mac products, which also made me happy. It's not 6K USD. Yeah, probably 3.3. Yeah, I believe that. but it's a write-off. I don't game or anything. Why not Windows 11 Pro? It wasn't in the thing whenever I bought it. Like, I wanted to make a custom PC, but then they said I had to wait like 3 weeks. So I was like, I'll just take this. Like, I don't think anyone realistically needs 4 terabytes of an SSD, but yeah, overkill if you don't game. I completely agree, but it also is going to last me a long time. So yeah. 4K CAD is like 300 USD. So true. Amit hears it from me all the time. I need 4 terabytes for research. Yeah, but you could just throw that on like a normal hard drive. How do you write that off? Well, it's 100% for use for my business. I run my entire business online. What do you mean? I didn't even buy it with my own money. My corporation bought it. Are you running huge Excel files or something? No, it's just no. Multiple upgrades for Nubank. Ooh, let's take a look. How could you possibly upgrade a company in the face of such a red day? Yes, we did. We got a few here. It essentially 3 $18 price targets in the last few days. 18 from Morgan Stanley, $18 from Itaú, and $18 from BTG. All with 32 or 37.2% upsides. Yep. They don't have many analysts covering the company because they're an international business, but still the average price target over the next 12 months is $17 and a 100% buy rating across the entire board. Dookie, I bought an AMD product. Hey, they're doing very well in gaming and client, and here I am adding to your benefit. And Dookie, I'm thinking about buying AMD with my own dollars. I don't even need you anymore. I'm grown up, and we're buying stocks on our own. Not that I don't need you. We like you, but I got my big boy pants on now. Yeah, maybe I didn't buy enough. Yeah, I only bought one Ryzen chip. Not good enough. But hey, every dollar does help. Okay, so just enjoy it. What are you getting, Amit, as a housewarming gift? Ooh. To be honest, I haven't thought of that at all. But I'm seeing him in a couple weeks in Vegas, which should be a lot of fun. Didn't even open the portfolio today. Yeah, I mean, honestly, I think that is what people need to do. I did open the portfolio today, but I honestly didn't really care. New chair. I don't have a new chair, but I should. That'll be the next one. I'm just hoping that maybe the Herman Miller sponsorship comes in one day. But the Fiscal AI sponsorship helps as well. I mean, ladies and gentlemen, help a brother out. Check out Fiscal AI / future. Are you going to depreciate the computer over 3 years? I think that is how it's done to some degree, but that's for the accountant, not me. Yeah, Mitt's moving out of his parents' bed. You make it sound like he so bad. I mean, once you see the place that he was living, 99% of us would love to be there. Um, I think that in this dip, I will look to buy more of the shares of the companies that I'm already heavily invested in because those are the names that I know very well. But sometimes there's those names like Meta, for example, which I do feel very strongly about, but have just let pass by me. So if we end up getting into a big bear market or something like, or a big sell off, big correction, um, I might end up taking stake in that in Meta or something, just so then I feel good about the fact that I actually have some big tech names here, more of the big tech names. Um, Meta in the 500s would be gold. Oh, I know, right? Okay, ladies and gentlemen, I'm starting to get pretty hungry. I'm gonna go get some food to eat, and yeah, maybe I'll get a new hat while I'm out. Thank you all so much for watching. I really do appreciate your time. If you guys are interested in watching more of these live streams, maybe videos that I post, hit the subscribe button down below. Bye for now.